Did you know most traders lose money? It sounds kind of dramatic, right? But what if I told you there's a statistic that backs this up? A number that's, well, it's pretty staggering, and it really gets to the heart of this whole thing. Yep, 90%. Let that sink in for a second. We're not making this up. 9 out of 10 retail traders, everyday folks trying to make a quick buck in the market, actually lose money. It's a brutal reality. So you got to ask, right? What is going on here? How is that even possible? And it brings up a really important question. What's the real difference between a trader and a long-term investor? Aren't they kind of the same thing? Well, to really get why that 90% number is so high, you have to understand this one crucial thing. Trading and investing, they're not just different strategies. Think of them as two completely different games. Different rules, different equipment, different goals, the whole shebang. So Trading is the 100-meter dash. It's a sprint. The whole point is to be fast, get in, get out, and try to skim a profit off those tiny, day-to-day market wiggles. You're living and breathing the now. What's the chart doing this minute? What's the latest headline? But investing? That's the complete opposite. It's the marathon. You're not trying to win in the next 10 seconds. You're buying a piece of a solid company you actually believe in, and then you're holding on. The goal here is to let time do the heavy lifting for you. It's all about the magic of compounding, where your money starts making its own money. And when you put them side by side like this, the difference is it's night and day, right? A trader, they're looking at market trends, trying to make a quick profit. An investor, they're looking at the actual value of the business, playing the long game for that sweet, sweet compounding growth. Okay, but hold on. If it's all so clear-cut, why the heck are we even talking about that 90% number? Why do so many people fail at trading? Well, it turns out the biggest, most dangerous trap, it isn't on a stock chart. It's right between your ears. Yeah, that's the million-dollar question, isn't it? And the answer has almost nothing to do with complex spreadsheets or fancy algorithms. It has everything to do with good old-fashioned human psychology. Look, we're human. We're wired with these powerful emotional biases. You've got greed whispering in your ear, hey, let that winner run just a little longer. Then fear comes crashing in, screaming, sell, sell now, at the first sign of trouble. You get a little win, and suddenly overconfidence shows up, making you feel invincible. And then there's that constant nagging urge to just do something, which leads to overtrading. It's a recipe for disaster. And all those feelings create this vicious emotional cycle. You start off with a trade, feeling optimistic, right? This is the one. Then it takes up, and boom, optimism becomes greed. But then the market does what it does. It turns, and suddenly fear creeps in. And if you're not careful, that fear can snowball into outright panic, which is usually when people make their worst decision, selling at the very bottom. So how in the world do you fight back against your own brain? What's the secret weapon? Well, it's the one thing that separates our sprinter from our marathon runner. It's time. Honestly, using time as your ally, it completely changes the game. Because here's the thing about short-term trading. Trying to guess what a stock is going to do in the next 5 minutes or even the next day, it's basically impossible to do consistently. It's like trying to predict a coin flip. The short-term market is it's pure noise. It's chaotic and random. And you can see it right here. The path of short-term speculation is just a gut-wrenching roller coaster. It's stressful, it's chaotic, and more often than not, it ends up down. But look at the long-term compounding path. It's not a straight line, but the trend is clear, steady, and upward. It's about harnessing that power over time to build something real. So when you boil it all down, what's the one thing that really matters? It's your mindset. That's it. It's the most important factor of all. It's the lens you use to look at everything. And the trader mindset versus the investor mindset. Wow, they are worlds apart. The trader is obsessed with beating the market, reacting to every little bit of news with this constant sense of urgency and anxiety. The investor, they're focused on just owning great assets. They're sticking to their plan, and they're all about patience and discipline, especially when things get choppy. And this is maybe the biggest takeaway from all of this. It's not really about right versus wrong. It's about what game you've actually chosen to play. See, the real danger, the reason so many people lose, is because they think they're running a marathon, but they're using the mindset, the tools, and the emotions of a sprinter. And that just never ends well. So that brings us to the final question, and it's for you. After everything we've talked about, what game are you playing? Seriously, Take a second and think about it. What game are you actually playing?